Let us start with a new concept, and to explain that concept I am taking base of this question. From following information is given that raw material holding period is 50 days, WIP holding period or production cycle is 30 days, finished goods holding period is 46 days, average collection period is 55 days, average payment period for creditors is 61 days. You are required to calculate working capital cycle, or it is given a name as operating cycle, or it is given a name as cash cycle, and so on. Further questions are provided to us. So basically we are going to start with a new concept, and name of the concept is working capital cycle, or it is given a name as cash cycle, or it is given a name as operating cycle. First of all, I am going to explain you the calculation, and then I am going to explain you the logic. Let's say, why do we do the calculation? Okay, so we are going to understand that say into two parts. Dear students, the way we compute the working capital, current assets minus current liabilities, exactly the same way we make the calculation of working capital cycle. It is calculated as difference between current assets time period minus current liabilities time period. As far as the current assets time period is concerned, it is calculated as raw material holding period plus WIP holding period plus finished goods holding period plus average collection period. So the total of all of them is considered to be the current assets time period minus average payment period. Holding period of the raw material is 50 days. WIP holding period is 30 days. Finished goods holding period is 46 days. And average collection period is 55 days. So it is 50 plus 30 plus 46 plus 55. That comes to 181. So the total is 181 days. Minus average payment period. The average payment period for the creditors is 61 days. So the final answer is 120 days. That is the way working capital cycle is calculated. In a way, that's the working capital cycle is calculated in terms of the time period. So we can say something like this: whatever the cash that we have, cash is first of all getting converted into raw material. Then raw material is getting converted into WIP. Then WIP is getting converted into finished goods. So we purchase the raw material and we hold it for a certain number of days. Then it is issued for production. So there is a production time period, that is WIP holding period. Then goods are produced and the goods are held for a certain time before it is sold to the customer, that is finished goods holding period. After selling goods to customer, it is converted into debtors, that is average collection period, and then we get the collection from the debtors. So this is the time period for which we are required to make investment in the business. That is the reason it is given a name as working capital cycle or operating cycle or cash cycle. This time period is getting reduced due to creditors, because that is the time period for which we get credit from the suppliers and we have to make less investment in the business. So we are having the reduction of the average payment period, that is the creditors. This is what we understand is the working capital cycle or operating cycle, that is 120 days. My focus right now is only for the explanation how to calculate. Why do we calculate? I'll just come to that point in some time. The second question is, what is the cash turnover ratio or working capital turnover ratio considering 360 days in a year? I want somebody of you to tell me answer in the chat box. What is the cash or working capital turnover ratio considering 360 days in a year? So dear students, answer will be calculated simply like this. It is 360 days divided by 120 days. So the answer would be 3 times. So the working capital turnover ratio or cash turnover ratio is indicating what is the number of times working capital is getting rotated in a year. This rotation takes place for how many times in a year? That is what, say, this turnover ratio is indicating. The rotation is for 3 times in a year. Next question. Calculate working capital requirement based on working capital cycle or minimum cash to be maintained. Annual expense of the company is 36 lakhs and 1 year is consisting of 360 days. I want somebody of you to answer in the chat box that what would be the answer for the third question. So friends, again we have a simple assumption that the yearly expense is 36 lakhs. There are 360 days in a year. So daily expense is 10,000 rupees. We have to make arrangement of the working capital for the first 120 days. So 10,000 into 120. Answer would be 12 lakhs. Yes, it is as simple as that. We are supposed to make the arrangement of the working capital for the first 120 days only. Once first 120 days is over, afterwards the cash flow will be generated from the business itself, with which we can pull on our business further. And we don't have to make any investment later on. So working capital investment would be 12 lakhs. A small assumption is made that the annual expense of the company is evenly spread throughout the year. Fourth question is, if cost of capital is 10%, calculate carrying cost of the working capital. I request you to answer the fourth question in the chat box. Friends, the answer of the carrying cost is very simple. It is the working capital investment 12 lakhs into 10%. Whatever the funds which we have blocked in the working capital, that amount could have been invested somewhere else at the rate of 10%, and the answer would be 1,20,000. Now friends, we understand something like this. Dear students, see over here, based on the working that say we have done over here, now I tell you that say why do we compute the working capital cycle? How to calculate, that is done. Why to calculate, that is what I am explaining to you. Basically to calculate the answer of the third part of the question, in a way that say the working capital cycle will help us to make the calculation of the working capital investment in the business. Basically we understand that say so far the questions that we have done for working capital requirement, and say this question has a slight difference. Let's say this question will give you an approximate idea what is the working capital investment that say we have, while the questions that say we have done so far, in that say we are able to get the accurate answer, let's say what is the working capital requirement that we have. So in comparison to the accurate answer, this will give an approximate idea, let's say what is the working capital requirement that we have in the business. That is the reason say we have the working capital calculation to be made. So we are making the calculation of the working capital cycle. This is the objective. How to calculate, that is what we have discussed. Cash turnover ratio or working capital turnover ratio is indicating number of times there is a rotation of the working capital in a year. So based on this working capital or cash turnover ratio, you can compute the working capital investment, that is 36 lakhs divided by 3, and the answer would be 12 lakhs. And for the last one, we can say that so the working capital into cost of capital is annualized carrying cost. Please write down heading. Working capital slash cash slash operating cycle. In that, write down first point. W.C cycle, the working capital cycle, is calculated in terms of time period. Full stop. It may be number of days or number of weeks or number of months. Second point, working capital cycle is calculated as a difference between CA, current assets time period, and CL, that is current liabilities time period. Full stop. Friends, cash cycle means working capital cycle means operating cycle. Okay, I'm not dictating name of all three of them. Third, working capital cycle is useful to compute approximate investment of working capital in the business. Full stop. It assumes that annual expense of the company is evenly spread throughout the year. Full stop. Fourth point, cash turnover ratio or working capital turnover ratio indicates that for how many times there will be a rotation of working capital in a year. Full stop. Then I done formula in that working capital cycle is equal to raw material holding period plus WIP holding period plus finished goods holding period plus average collection period minus average payment period. That is the way working capital cycle is calculated. Next is working capital or cash turnover ratio. It is 360 or 365 days or 12 months divided by working capital cycle. That is the way working capital turnover ratio or cash turnover ratio is calculated. Next is working capital requirement. In that case, it is annual expense divided by 360 slash 365 days or 12 months into working capital cycle. That is the way working capital requirement is calculated. Dear students, annual expenses will be only cash expenses. So we have to exclude depreciation. Next is carrying cost of working capital. In that case, it is working capital into cost of capital. That is the way carrying cost of the working capital is found. Because working capital is the investment that you are going to make in the business forever. So into cost of capital will give annualized carrying cost. I request you to draw this diagram. In case of a theory question, if at all you draw this kind of diagram, that will improve the quality of your answer. Now we are writing answer of the question. I request all of you to write an answer along with me. One by one we write, that is writing answer of the questions. First question answer. In that working capital cycle slash operating cycle, and the other name is cash cycle. It is found as raw material holding period plus WIP holding period plus finished goods holding period plus average collection period minus average payment period. So it is 50 plus 30 plus 46 plus 55 minus 61. So the total is 181 minus 61, that is 120 days. That is the way the answer of the first question is found. Second question. The second question is cash turnover ratio or working capital turnover ratio, assuming that say there are 360 days in a year. So cash or working capital turnover ratio. In that case, it is 360 days divided by cash cycle or working capital cycle. So it is 360 days divided by cash cycle is 120 days. That comes to 3 times. Third is calculation of the working capital requirement. So it is working capital requirement in that case it is annual cash expenses divided by 360 days. Into working capital cycle. What is the annual cash expense? It is an amount of 36 lakhs divided by 360 days. Into working capital cycle. So daily expense is rupees 10,000 into 120 days. That comes to rupees 12 lakhs. That is the way working capital requirement can be calculated. This answer could be calculated using an alternative method. It is annual cash expenses divided by working capital turnover ratio or cash turnover ratio. Annual cash expenses is an amount of 36 lakhs divided by 3. That comes to rupees 12 lakhs. This is the way we'll make the calculation of the answer. Fourth question. The question says that so you're required to find carrying costs of the working capital. It is calculated as working capital into cost of capital. It is rupees 12 lakhs into 10 percentage. That comes to 1 lakh 20,000. This is the way carrying cost of the working capital is formed.